good, farmers? My name is Atidio, and last week I promised to keep you, up to date, keep talking about silver a little bit more, but because I'm just a talking head, filming in his mom's basement and practically know nothing about that market, I have chosen to instead invite new guests to the channel each week to do the talking instead of me. So today I have a public's favorite, the CEO and co-founder of First Majestic Silver, Keith Neumeyer. So last time he was here, as you might remember, he talked about a $100 per ounce silver. Okay, so I'm definitely looking forward to more of his insights from him and his new price target on silver and gold. However, this is not a paid promotion or anything like that. Okay, I'm not receiving any compensation for this video, besides your eternal love, of course. So a like or a share is greatly appreciated. But I am, however, a shareholder of the company of First Majestic Silver that Mr. Neumeyer is running here. But that does not mean I'm inviting you to buy or sell anything that is mentioned in this video, okay? Since I'm not your financial advisor, and you should always do your own research, as I cannot and will not be held responsible for any capital gains nor losses, okay? It's all up to you. It's all up to your decision. It's all in your hands. Just keep that in mind going forward. But enough of that. Keith, thank you for being here, my sir.
Oh, great to see you again, Antonio.
Yeah, same here. Absolutely. Bet on it. Listen, Keith, it is important for me that my viewers, the farmers, as I like to call them, watching this, they know exactly what type of person they're listening to here. And obviously, there's hours upon hours of interviews of you out there for years and years now. And we all know that you're a serial undertaker or an entrepreneur in the gold and silver space. You now actually run two mining ventures, that be a gold and a silver one. But besides that, how do you look at silver and gold? Would you say they're an investment, speculation, or merely a wealth preservation?
Well, I look at gold and silver quite differently. Gold is a currency to me. Gold is money. Gold's the granddaddy of all money, and I think that gold should be in everyone's portfolio. Silver is a different animal altogether. Silver is a very, very misunderstood metal. Silver, in my opinion, is a strategic metal. It is precious, of course, we know that, but I don't think it's money. Some people do, and they put it in the same camp as gold. And silver kind of trades with gold. It's kind of hard to foresee that silver would go up when gold goes down, despite today we have an odd day where at last I checked, gold was down $10 an ounce, and silver's up 10 cents an ounce, which is a little bit unusual, but for the most part both metals do kind of trade the same, and then the ratio of 70 some odd to 1 has kind of stuck around for 30 some odd years. My thesis is that as people wake up to the supply demand fundamentals of silver and realize that it is a strategic metal, and realize it's so critical in everything that we do as a human race, and we can get into some pretty interesting numbers if you wish.
Oh, I agree with you 100% of that. That's a very interesting way of putting that. And another great question that oftentimes is a good one to help you understand where a person stands in all of this is their price target on silver. And I know you've been talking about eventually getting to $100 per ounce silver and more, and people love that. So do you still stand behind that number?
I've gone through times where I kind of question myself, because when I put First Majestic together 18 years ago in 2002, my view was that silver would hit its old high again, which was $50 an ounce. It took 10 years to do it. I didn't think it was going to take 10 years, but I put the company together when silver was trading about $5. And it did hit 50, but I didn't expect silver was going to go from 50 to 13, over the next 5 or 6 years. That was pretty shocking. It's very paper driven. It's very headline driven. Money started coming out of the mining sector, and the demand for the metal continued to be extremely strong during those years when the price was falling. So demand really didn't matter much. It was more of a financially driven price decline. A lot of money was getting sucked up, by the big tech companies, and the Nasdaq, boom and all that, and the mining sector, got ignored. Despite my views, I'm only one voice, but I do think that we're going to see ratio collapse. I think we're mining at about an 8-to-1 ratio. So that means for every 1 ounce of gold worldwide, we're only mining 8 ounces of silver. Which, you think about it, it's a pretty shocking stat. When the scientists feel that there's about a 16-to-1 ratio in the Earth's crust. So in fact, we should be trading around 16-to-1. And if you look at the last 1,000 years, we were trading at 16-to-1 for most of that period of time. It's only really since the paper markets were created in the 70s, where the big banks started getting involved, and the banks, and then the commercial requirements for the metal, started to be traded against. Where if you're Sony and you need 50 million ounces, I guess, of silver, to produce televisions for 2021, you're going to pick up the phone and call JP Morgan or HSBC or whomever and say, hey, please deliver our silver to these exports around the world. And the bank says, fantastic, and they fix the price. Your price is $24, and Sony's happy. They get a fixed price for the next 12 months, and now it's up to the bank to try to figure out how to get that metal. And they go to the miners, and they get their supply. And it's now no longer in their best interest to let the metal trade above, $24, because, all of a sudden, if it trades at, $40, $50 an ounce where it should be, that trade starts to, cause some problems, on their hedge books. And then that's why, the metal's held down, to the degree it does get held down, which is very unfortunate. And being such a small market, it's easy to do for them.
You just said something right there, and I want to go back to it about the gold to silver ratio. I know about it, but you're a big advocate for taking in consideration both the mining and the natural reserves gold to silver ratio. They're both very important, and I like and respect that, as I do think it's important to look at real life, really, as opposed to only the trading ratios that have only been around for a couple of years. However, if you're an advocate for triple digit silver, and excuse me for stalking you on the internet like that, but you recently tweeted a table on how high silver prices may rise. So for silver to hit that 100 or triple digit price mark, it either takes a massive run in precious metal prices in general, so that it pushes gold up as well, or it takes a gold to silver ratio of far beneath that historical average in the last 40 or so years. So what of both would you say is likely to happen first?
The ratio is going to collapse. So I think you need something in the supply chain to break first to cause it, because I think that markets are driven by headlines. Tesla, Apple, whatever the case may be. The money is there's 6,000 hedge funds in the world that trade these markets like crazy, and probably about 85 or 90% of trading that occurs around the world is all computer driven, by algorithms, and these algos look for headlines, and they, whether it's a Trump tweet or whether it's, whatever the case may be, these headlines move markets. I've not seen yet a headline that says, Samsung can't produce their cell phones because they can't get silver. Right? If that headline ever happened, then silver would go to $100 within seconds. Well, not quite seconds, but pretty quickly, because all the hedge funds would start driving into silver. And, interestingly enough, because of the Biden win and the new Green Deal coming, supposedly, there's now talk, and I've seen some of the big banks say, the next administration is going to be very friendly to silver because of silver panel demand, electric vehicle demand. So possibly what we could see, at least I'm hoping we're going to see, silver starting to show up in the headlines, and people will actually break the relationship between gold and silver, right? And look at silver as actually a unique metal. It's not gold. It's actually a very critical component in everything that we want to do as a human race to go green. That story is not really out there in the mainstream. People talk about lithium, of course, and other elements, rare earths in some cases, but the silver story is just really not broadly talked about. When it does get talked about, that's what I think is going to drive the money into the silver market, get us up to triple digits, and I think that ratio and will probably drop to its normal ratio of 16-1. It could go lower.
Do you think that silver shortage will have a play in all of this happening, especially in the headlines? As you just said.
Well, for sure. If you go back for the last 4 years, silver production's been dropping. 2020 has been a terrible year for silver production because of all the COVID situations. We had something like 50% or 55% of all silver mines shut down worldwide for over 2 months. Some of them were actually even shut down for 4 to 5 months. They're still not all back up and running 100%. Even First Majestic, we've got one mine that hasn't been able to get back up to its 100% level yet. So it might not be until next summer, because there's just so much, the workforce is just so badly affected that they just can't, we just don't have the manpower to bring in the necessary bodies to do the work that was historically done. So, it's going to be some time. So you've had 4 years of declining supply from the miners, and you've got 2 major industries: solar panels, which is just starting. We're about 10 years into that solar panel boom. The governments are pushing solar panels like crazy. In the U.S. government, at least the new U.S. government, the Chinese government, European governments, all over the world is pushing solar because it's perceived as the green energy, and that's a huge consumer of silver. Over 15% of the world supply of silver is going to solar panels right now. And you look at the auto sector, and the stats are pretty astounding. Like yourself, that governments around the world have started to talk about not allowing fuel combustion cars in their streets, and they want to have all I guess electric cars to be replaced, or to replace fuel combustion cars. Some cities have said 2030, others have said 2040, but whatever the number is, currently there's 1.4 billion automobiles sitting on the surface of the earth. There was 90 million, or 94 million actually, I think is the correct number, that of autos produced in 2019. Of those 94 million, only 2.4 million of those cars were electric vehicles. Electric vehicle consumes approximately 3 times more silver than a normal fuel combustion car. So if the governments have a goal of replacing all fuel combustion cars in 1 decade or 2 decades, electric cars, we're not producing enough electric cars to replace over 1 billion fuel combustion cars in 10 years.
Yeah.
So it's impossible. So you need more electric cars being produced, and you need more raw materials to go into those cars to even accomplish those goals. Currently the miners aren't producing enough metal.
That's true. Absolutely. I recently talked about that in a different video about electric vehicles, but Deloitte expects us to have about 31.1 million electric vehicles by 2030, I guess. Sold every year, that is, starting from there.
Oh, per year. Okay. Mm-hmm.
Per year, right? No, not like on the road. Obviously, that's too little number, because in 2019 they sold about 2.1 million electric vehicles, which is nothing, So imagine going from 2.1 to 31.1. That's a 15x almost right there in about 10 years per year, right? Yeah. So it's huge. And actually, talking about that, I wanted to share a piece of my research with you and see what your opinion on it is. Why I asked you about silver shortage is because a lot of people don't believe it's something real. And obviously I questioned that, and that's practically my job. So I went into looking into it, and the Silver Institute published their report about a month ago. And in there, they said that, obviously what you said, both supply and demand is what they said actually, of silver has fallen this year due to the global crisis. And their figures led them to calculate a global net surplus of about 31.5 million ounces. Okay, so a surplus, not a shortage. However, that was not everything. Okay, so I went reading and reading. Because this basically only took into account the physical supply and actual physical delivery that took place. The one that they knew about. Obviously, they don't know about everything, but or at least as far as I understood it. But that, of course, is not all of it, right? Since we live in this era of exchange traded products, and everything you can buy on the stock exchange just, I guess, appears a lot sexier for many people out there. So, by the way, who I guess those people have never held silver in their hands, because you just fall in love once you do. But that exchange traded craze that's going on, that's also seen in silver, of course. So you now have, as you know, obviously, you now have these ETFs that claim to hold physical products. So they're buying, practically buying shares of them. You're basically buying physical silver. That's what they're saying, and they say that. Or at least in that annual silver report, what they said is that there's 350 million ounces of demand coming in from that side of the market. Okay, so if my math is correct over here, that's a silver shortage of about 318 million ounces. Okay, so what do you say about this entire research? Do you think that's accurate, or am I wrong somewhere along the road?
Well, there's three collection services worldwide. One is CPM Group in New York. One is GFMS in London, England. And one is Metals Focus. First Majestic is a member of the Silver Institute. We switched over from GFMS last year to use Metals Focus for data collection, which is the numbers you're referring to. Interestingly enough, GFMS is owned by BlackRock, and the big ETFs are also owned by BlackRock. So so I think that's a bit of a problem. And you look at the Metals Focus data, which I completely disagree with. They have hedging as on the supply side of that calculation. So hedging is paper silver. So how do you have paper silver on the supply side of any physical measurement? Go back and look at that chart. And I think it's one of the last lines on the supply side of their research. When it comes to the consumption side, going back to the supply side, it's easier. It's pretty easy to find out what the miners produce. And most of it's public data. Governments also have export-import data, which can be tracked. So you can put together a fairly accurate number on the supply side. There is underground mining and there's illegal mining, and so there's stuff that doesn't show up on the supply side, but it's relatively small. On the demand side, it's a big problem. The refineries are generally privately owned. And they don't talk about what metal comes in and what metal goes out. It's very confidential. I've talked to many refineries, and unless you get the guy super drunk, and he might throw some numbers out at you, but they're not going to give you any kind of accurate financial statements on how much gold and silver goes through their refinery. So that's a problem. You also have the Samsungs, the the Teslas, the Toyotas, the Sonys, the big, huge consumers. They don't want to tell you. Ask Toyota how much silver they use in a year or how much copper they use in a year. They won't tell you, and it doesn't show up anywhere in any data. So it's a guessing game. So these guys try to figure out how many computers are manufactured worldwide, how many cell phones are manufactured worldwide, you know, how much silver or gold is in, you know, what car, this car, that car, and there's so many different models of cars, so they try to come up with these numbers, and then they plug it with a hedging number, or they plug it with a investment number just to balance the numbers out. So they get a zero at the bottom, but it's all a bunch of nonsense. You know, I've had Samsung in my office, and I've asked them specifically, how much silver do you consume in a year? And there's no way. The second, you know, because they're so paranoid, because they know this market is so tight, and the last thing they need is the hedge funds of the world to start front running them like they've done in other metals. Like, look at uranium a few years ago. You know, look at cobalt. You know, look at palladium. You know, these are metals that the hedge funds woke up to and then decided, hey, we should front run the big consumers. And so all this information is kept very, very secret. And these three collection agencies do a terrible job in the work that they do.
It's always so fascinating to me. I'm losing my words here. But I also want to go back to these physical ETFs, because that's something that a lot of people have been putting a lot of money into, even my personal clients. So, you know, I know some of them do hold the silver, and I know a lot of them only claim to hold it and have, you know, they actually claim that they have a lot more metals than what they actually have, because there's a lot of lending and leasing and whatever going on. And it's actually important to me to see what an expert thinks about it. So, you know, I don't ask you to bash or push any names, but just in general, your opinion, your take on it is much appreciated. What do you think about those silver physical ETFs?
Yeah, they're also nonsense. You know, when you're BlackRock, and then you got so much control over the market. You know, you don't even need to have this physical, because you can control everything. You know, they control the information coming out because they own GFMS, and then they own the ETFs, so they can so they've got that side, and they're also financing the miners. So they, you know, they're embedded in the entire system, right? So, you know, the system itself is corrupt, and you know, the Sprott fund is probably the only fund that well, there's a couple of Swiss funds are quite good as well, but they're quite small. But the biggest one probably in North America is the PSLV, you know, the physical Sprott fund, where they actually do have the metal, and it's certified and so on and so forth, and you can take delivery of it and everything else. But, you know, when you see the big, you know, silver ETF, SLV, I guess it is, it added something, a crazy number. I forget what it was. I remember Eric Sprott was talking about it during one of his podcasts. I think they added something like 60 million ounces of silver in a single month, you know, back in March or April of this year, which is impossible. You know, you couldn't do it, right? There's no way unless, you know, they're paying $10 above spot or something, and they're able to, you know, I don't know where they'd find it even at $10 above spot, but it's just a paper transaction. They go into the paper markets and they claim they own it, and people that buy it, you know, think they're actually buying, you know, physical metal, but they're not. They're just buying paper.
So to kind of sum it up on those ETFs, would you say that you know, a couch investor, as they call us, a regular retail investor like myself, would you say I'm better off going for physical ETFs, or do you think like the physical metal, like holding it into your hand, is still the better option today?
Well, you know, there's risk, you know, holding the metal in your home. You know, I guess you know, you got to keep it somewhat quiet and not tell the world that you've got, you know, a block of gold in your closet. Might not be there very long. So, you know, I guess there is risks around it. But, you know, I think if you have a good ETF like a Sprott, physical gold or silver ETF. I think that's fine. They move with the metal price. I think they trade at a slight discount to metal as well. So maybe that's an advantage. Maybe during a screaming bull market, they'll trade at a premium. So maybe get a little bit of extra upside as a result. But for me, I like the miners because I like to speculate, and I've been in the mining sector for 35 years. So I have a lot of comfort around investing in mining stocks, and I've done quite well. I've of course lost money like everyone, but for the most part, I've done fairly well. But it's always nice to have a little bit of silver or gold to rub in your hands.
I absolutely agree with that. Hey, 35 years of experience. What did you start when you were 5? No, I'm just kidding.
I turned 60 this year, so.
Oh wow! I definitely wouldn't say that looking at how much hair you have. My hair is fine, so hope I can say the same for myself. Yeah, listen, Keith, you came through and then brought a lot of real life value here. I know many of us are just desk researchers, and as good as one might be in desk researching, your field experience definitely tops it all. So many thanks for doing that. But it would be rude of me to just let you go without asking about the dividend policy that you just announced about First Majestic Silver. So please tell me what's that all about, and what can we expect from your dividend?
We've been getting a lot of questions from investors and shareholders. When you're going to pay dividends, and and so on and so forth. So we decided, let's bite the bullet and let's finally do it. And as a large shareholder myself, I'm pretty thrilled because I'm going to personally benefit from it. But that wasn't really the decision. We wanted to return some capital to our investors and potentially even increase our investors, because some investors want to see a dividend, and potentially some investors won't buy the stock unless we do pay a dividend. So we'll see if it attracts more investors. We don't know. Some say we will, so it's only time will tell. We're starting off with 1% of revenue, which is a little bit modest. It's not huge, but our revenue at current metal prices in 2021 will be somewhere around $500 million US. So approximately 1% of that would be, or 1% of that would be approximately $5 million US. So that'll be returned to shareholders in a quarterly basis. And then we hope to ramp it up. If I'm right, and then we do see triple-digit silver, even if we see $50 silver, and then I'd like to see that dividend go up to 2% and 3% and 5%, over the next 5 years or so.
Oh, okay. So you are planning on making this a long-term thing. Like it's not just it's not a one year thing, or not a one-time thing. You plan on keeping it for like the next 3, 5, or possibly even longer years?
Oh, forever. I would. When you launch a dividend, you don't want to take it away. It's quite negative, because a lot of people will own the stock just for that reason. And if you have a big institution that is expecting you to pay a dividend, and all of a sudden you pull it, likely that institution or that retail investor is going to sell the stock. So you never want to really take it away, but you could change it, and that's a better solution. Because the mining sector is very cyclical, and we go through these 10-year periods generally. We had a big bull market from 2002 to 2012, and then we had the bear market from 2012 to 2016. We're now call it 3 or 4 years, however you want to measure it. So we should have another good 5+ years ahead of us, I think, and if we can get the dividend up to some larger number, I don't know exactly what the number is going to be, but just for example, it's up 3%, let's say. When the next cycle ends, or the next bear market comes, we could then reduce that. As the metal prices come down, if they ever do, and at least never going to zero is the point.
Yeah, the reason why I asked you that is exactly that, about the cyclicality of the industry. I've been studying the oil tanker industry for about a year now, since the initial run in March. So I do see them, playing with the dividend and all of that. So that's why I asked you that. But
yeah.
Listen, what about like end game? Like, what is your end goal for First Majestic in, let's say, in another 18 years?
Well, my goal is to get up to 50 million ounces production on an silver equivalency basis. We don't know if that's going to be all in Mexico yet. We're looking around the world and looking for M&A opportunities. We're exploring quite heavily right now. We've got record exploration going in Mexico. We had something in the order of 25 plus rigs active throughout the year. We're going to have similar number of rigs active in 2021. So we're always looking for new discoveries. We're always looking for ways to build our current operations. If interesting M&A target comes along somewhere else outside of Mexico, we might pull the trigger on something like that. If it changes the business, we won't just do it for an exploration project, or we would do it for something that's nice and chunky that would change the business, and looking to build.
Honestly, that sounds both very exciting and very expensive. So it also gets me wondering, would you plan on getting the money from mostly? Like, are we mostly looking into share dilution, or do you think debt is the way to go from here on?
Well, there's a myth about issuing shares. If a public company issues stock and there's an internal rate of return on that issuance, great enough, then though the issuance of those shares can be accretive for the right transaction, right? Mm-hmm. So, just because you have more shares out, it doesn't mean you've somehow taken value away from shareholders, right? It's not, if we're smart and you buy a company for, 1 times revenue or something, and in a combined entity, shareholders will give it 3 times revenue value, because of whatever their view on metal prices or their view on what we can do with the asset and how we can improve upon it, and so on. Then, despite the fact we issued all these shares, the stock would go up, so everyone would be happy. So that would be something that's accretive. So, I don't particularly like debt. It's I think debt is more dangerous than issuing more shares.
Yeah, I very much agree with that, under one condition, that is that the company is actually using the money that they get from shareholders to actually bring value to the shareholders that is larger than the amount by which the shareholders have been diluted. That's what it comes down to, and I like that. And actually, besides money, as I said, I'm a desk rat. I do my research on a desk behind a computer, so I don't know much about the real life. But there's a lot of things that could obviously go wrong in that development. And there's a question that I see going around on YouTube and Twitter, and it's about sovereign risk. Like, if silver actually goes to that $100 per ounce, First Majestic has million upon millions of ounces in the ground over in Mexico, right? So what stops the Mexican government from, knocking on your door one day and saying, get out, the mine is the nation's best interest, and we're taking it away?
Yeah, it's Mexico is part of North America, and Canada and the United States are huge trading partners, of Mexico, and if there was some kind of mass expropriation like that, I think it would be pretty negative for relations between these 3 countries. I wouldn't think, I suppose anything's possible, but there's a lot of manufacturing going on in these 3 countries, and they rely on each other a lot for supplying whatever's needed to this continent, and that we all need industry to be active. Each country needs investment from each other. So I don't know. I just it would change North America, dramatically if something like that was ever to occur. So, I think that some countries, I would stay away from for sure. I probably shouldn't name countries, but there's some of the Eastern European countries, there's some of the Asian countries, there's some South American countries that I would avoid investing in for sure. But I don't put Mexico on that list. Despite the fact, Mexico is more difficult today than it was 18 years ago for sure, but it's not to that degree.
Yeah, I'd say definitely don't name those Eastern European countries, because I was originally born in Bulgaria, so that's in Eastern Europe.
Yeah.
But yeah, no. Listen, Keith, I can imagine being a silver investor, like a beginner silver investor, looking at your company, wanting to invest, but just wondering what exactly is worth the 3 billion and potentially more in market cap for First Majestic. Like, what do you say to that? Where is the value to be found in your company?
Well, first off, there's a bunch of silver in the ground. We have something in the order of 500 million ounces of silver sitting in the ground. That's a lot of silver. You've also got the cash flows. You've also got just the value of all the assets that we've invested in, and then you've got of course the view upon the view from the investors on what the future of silver looks like, from a supply demand fundamental, which obviously drives market cap. But also, I think you've also got management that is pretty well respected management team, and we've built this business from zero. We made very good transactions over the 18-year period. We haven't batted 100%, but I think we've proven that we're a very strong, nimble team that can take advantage of situations to grow the company, and we're pretty lean. We don't think we waste money. We think we spend our money well, and for the benefit of investors. And for the most part, I think investors would agree with that.
Yeah, if I may add to that, I think you yourself are a big portion of the value for this company. Not only for your knowledge and experience, but you're also one of the hardest working people in the industry that I know of and have talked to. So you're a great promoter as well. You're well spoken about the company and all of that. And I really don't think that should be ignored. I just think that should be appreciated. I think that also really forms the basis for First Majestic Silver in general. So yeah, Keith, I'm gonna let you go about your day. I very much appreciate you, making another visit to my channel, and I'm sure farmers will appreciate it too. I hope we can speak again soon after you've made that dividend payment, because I'm definitely looking forward to it. So yeah, thank you for being here.
Well, it's going to put a smile on my face when we finally make that first payment. So it's going to be a great day for us and all the shareholders, and super happy that we're going to finally end up doing it.
Oh yeah, I can only imagine. Same, it's gonna put a big smile on my face as well, because I'm primarily actually a dividend investor, and the money that I invest into growth, growth companies. That's what I first saw First Majestic Silver as, is actually just about 10% of my my entire capital. And I now get to move First Majestic, which was originally a growth investment for me, to my dividend portfolio, and really happy to do that actually. So yeah, thank you for that. And again, thank you for taking the time to be here, and take care, my sir.
Oh, thanks very much. And, people should look at the website and, look at our corporate presentation. There's some good information there. And I can also be followed on Twitter if people care to do that, Keith_Neumeyer. And feel free to contact our investor relations people at any time.
Yep, absolutely. Absolutely. I appreciate that. Thank you.
Yeah, thanks, Antonio.
And farmers, if you want to know what I think about First Majestic Silver or any other of the ventures that Keith Neumeyer is involved in, and what my opinion on them is, whether I'm buying or selling and whatnot, I'd suggest you consider joining the private membership community on Discord, as there you not only get access to my personal portfolio, but you actually get access to all the stocks that I buy and sell in the stock market even before I've placed the order. Okay, and also by joining the server, you even get the chance to forward your own questions, get a voice with CEOs and company representatives, just as Keith Neumeyer. And when that's done, I'll leave you with this one simple message that I always do, but please don't look at the numbers, see the numbers.